Depreciation is basically a tax deduction. What it is you get to claim a deduction that relates to the cost of the building, the value of the items within the building, and you get to write it off over the time that these things wear out. Buildings are going to wear out over time, and the tax office says, well, as part of that, the cost and the value of these things are going to get claimed as a tax deduction throughout the life of that property. The importance to investors basically is that tax deductions mean more money. It saves you a lot of money over the financial year, and you get to pay less tax basically for owning an investment property. A two-bedroom unit valued at about $400,000 will have substantial claims available. Depending on the age, we'll change it. Let's take a new one, for example. A new property valued at about $400,000 should get deductions in the vicinity of around probably $8,000 to $12,000 a year in the first 5 years. What that means, let's say it's $10,000. It's a tax deduction, it's cash that you get that you don't have to pay out, but you do make a deduction for. Depending on your tax bracket, most people are probably on a 30 or a 40% tax bracket roughly. A $10,000 deduction means about $4,000 back in your pocket for the financial year, or around about $80 a week for that new property. If the property's a little bit older, a few years old, basically, if it's up to about 15 to 20 years old, the deduction should be somewhere between that $5,000 and $8,000 a year for the first 5 years. Depreciation still applies to old properties. It's a common myth. I hear it all the time that it's too old, someone said it's too old, my brother said it's too old, there's no depreciation available. The depreciation will impact on how much we get to claim, but older properties still get it. If it's been built after 1987, we still get to claim part of the structure as a deduction. So that makes a fairly big difference. But no matter what the age, there's still some deductions that relate to the fixtures and fittings, or what we call plant items in the building. So if it's built in the 60s and you bought it yesterday, there's probably still some deductions available for some things in there. And we'll check and make sure there's enough deduction to make it worth actually doing this depreciation schedule before you actually do it. As a renovator, we discussed and talked about older properties and that you can still claim some deductions. As a renovator, one of the important things is that when you've bought that property and had that property, you've bought things that are there. If you renovate, you're going to throw some of those things away. When you bought them, they had a value, and you're able to claim some depreciation on those things. But when you throw them away, you're throwing whatever is left away. You're throwing the value away, which is not bad, because firstly you get to make an instant deduction for those items in the year that you do throw them away, which can add up to some substantial amounts of money. And then the things that you do put in afterwards, you'll be able to claim depreciation on them going forward. Yes, we find many investors are unaware of the deductions they can claim. I talk to these people all the time that have, bought a property, they went to their accountant and their accountant said, you should sort this depreciation out properly, go get the quantity surveyor involved. And I see situations in the past where, like a lady a couple of weeks ago, she had 3 properties and they were fairly new, they were in the $400,000 to $500,000 range, and she just bought them in the last year. And we went in and found deductions in those things that meant she was going to get an extra $15,000 back in her tax in that year that she didn't know about, and she was ecstatic. The best scenario, I've seen a guy get just under $180,000 in extra money back from the tax office by doing his depreciation properly, because he hadn't been doing it properly. He didn't own a couple of houses, he had a couple of small motels, but still, he got a lot of cash back and he was very happy.